Do our conversations about crypto have you wanting to do more with your career? Check out Fidelity, which has been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and also among the first to launch a Bitcoin exchange-traded product. So why consider Fidelity? Because they invest in their talent with continuing education programs and they invest in their technology, ensuring associates are working with the latest and greatest so that their crypto teams can continue to improve and evolve their product, staying ahead of the rapidly changing digital asset landscape. With Fidelity's iterative, scalable approach, built to meet today's increasing demands across the digital space and a commitment to developing innovative tools, there's never been a more interesting time to work in crypto and DeFi at Fidelity. Explore Fidelity Crypto Careers today. Go to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer. And now it is on with the show. My guest today is Max. Max is head of sales at CoinTerminal. Of course, CoinTerminal is a fundraising platform. It helps Web3 founders raise millions, and of course, it gives retail investors a fair chance to participate. You can get access to token pre-sales. It's very interesting. Of course, we'll learn all about this today. Welcome to the show, Max.
Hey, how's it going? Thanks for having me, Andy. Pleasure to be here. So yeah, I'm happy to give your audience basically a snapshot of what we do at CoinTerminal, how we're working with Web3 founders and also Web2 founders that want to have some exposure to the Web3 ecosystem. And as you said.
Well, look, absolutely, Max. Before we do that, firstly, let me say it is a pleasure to have you here. What we like to do at the beginning of the show, it's always good to get a bit of background. So it would be fun to get a bit of background just on yourself, Max. Just give us a little bit of an intro. What have you been doing, I guess, in the lead up to joining the team at CoinTerminal?
Sure. So basically, I started my first engagement with crypto or Web3 ecosystem was basically back in 2014 with Bitcoin, in the early days, I'd say. Not super early, like 2010, 2011, but it was still early. Bitcoin was trading at $200 per Bitcoin. Now we have it at more than $100,000 per Bitcoin. So that was my first introduction, as I said, in 2014. I've been a trader, investor for not a trader, but more of a long-term investor. I don't do any type of trading like day trading, just buying and just holding, long-term. And basically that was my first. Then I have a background in terms of marketing, sales on Web2. And in 2020, I started working in Web3 specifically, right? So I started working on a cross-chain bridge called, cross-chain bridge. And basically, from there, I worked with a lot of projects on go-to-market advisory. And then I started doing more Web3 sales. So basically understanding there's a lot of companies and projects that don't understand how to basically sell something in Web3, in crypto. Some of them, they don't even have a product to sell. Then, of course, I started working at CoinTerminal, where we do sell something that is tangible to projects. And this is not normal in Web3 because most of the Web3 projects that are building something, they're building a product. Sometimes not even, there's no way to monetize the product instantly, right? So it's not like a service or something that you can basically get revenue. And that's a big issue with a lot of Web3 companies. That's something we can discuss later. But it's that's basically how I started with CoinTerminal. Right now, I'm managing the whole sales department for Coin. And basically what we do is we have founders come to us. They want to launch a token. They have a product. And they come to us and they ask, okay, do we want to fundraise? We need help on the go-to-market. We help them with a lot of things, right, to make sure everything goes well on the token launch side of things. So that's what I'm doing. But when it comes to the sales department, I'm basically managing everyone at CoinTerminal. When it comes to the projects that are onboarding, they go through me, and basically then we launch them and we do assessments and all kind of stuff. But yeah, that's usually how we're working and how I started with CoinTerminal. So I'm trying to bring like the Web 2 sales elements to Web 3, right? Positioning, B2B, sales, etc., scaling companies, you name it. Yeah.
All right, so let's just go through some of that, Max. Yeah, so if just to give people an understanding of what Coin Terminal is, just explain like what the kind of the bigger vision is of Coin Terminal, and I suppose how you would differentiate Coin Terminal from some of the other token release platforms in the market.
Got it. Okay, so Coin Terminal, what we are doing differently is we are open access. So we don't have a token that users have to stake in order to get access to a pre-sale or IDO, right? So that's like the biggest USP we have in terms of like compared to other launchpads. Why? Because when you're investing on a project, you don't want to give all your liquidity to a launchpad token that you basically need to stake to get access to the project that you want to buy. In our case, it's like we funnel like basically the user goes directly into the project page that they want to buy, and they can do it through us. So that's the biggest USP we have compared to other launchpads. Of course, we have more than 100 launches in from like different verticals in Web3, DeFi, AI, game, like etc. Like we know usually what's going to work on the markets, right? Because we've seen all type of launches. So usually when founders come to us, they come for this. They come for fundraising, as I said, but also for advisory, and it's part of the service, because we want to make sure that the token that is launching with us is going to have basically a good token price action after TG, right? It's not only pre-TG, but also how well the token does post-TG, because as a launchpad, we make the revenue out of that. Like if like the more success a project has, the better we do, the happier our community is, and etc., etc. So that's our main goal. So I'd say the biggest difference between like Coin Terminal versus other launchpads, as I said, we're open access. All other launchpads in the space, at least 99% of them, they have a token. So you need to go buy the token. The second one is, as I said, like the advisory side of things. We're building a lot of things to make sure we're also friendly to Web 2, right? Because we do understand there's like a lot of Web 2 companies that want to have some exposure to Web 3, right? It doesn't have to be the whole revenue model like a lot of Web 3 companies, but it can be kind of like secondary monetization model that they can add to their company, right? So our favorite companies are the ones that have revenue, right? Like they're not like, most of them don't have any revenue, right? They come to us and they want to launch a token. We have to take them through and we tell them, okay, what's your revenue model? Most of the times they don't know, right? So, and basically what happens is they raise money. You probably know this. They raise money, then they burn through the runway that they have, and the project dies, right? So that's the usual. How do we prevent this? Okay, like through revenue. Like we think it's really, but it's not easy because, of course, on the B2C side of things, you need to be able to acquire users, like as a Web3 project, but you also need to be able to retain them, right? So retaining users in Web3 is really hard. And we know this. We have 600K users, and we're always working on new client acquisitions strategies, right, on the B2C side, because as you probably know, our investors are retail, like they're like users most of the time, like retail investors that put maybe $200, $500, $1,000 on a project, and they want to make some money. They want to wait for trading to happen, and the most important thing that I didn't mention earlier is we're mostly doing refundable sales. So what does it mean? Users have 24 hours to decide if they want to keep the token they buy or if they want to refund on their investment. So that's huge for users, right? And I'll explain why this is also good for projects, for founders. Basically, let's say you get $1,000 worth of allocation and the token doesn't do well when it goes on listings, right? You can get a refund. That's risk-free for the user. That brings a lot of attention. That brings a lot of volume into our platform, plus the open access, right? And you as a founder, if you're a founder, you have the ability to raise 10x or 15x more than a non-refundable round where user has to like maybe go through your whole vesting, go through your and most of the times they're going to be losing money in long term, like from what we've seen in the markets, right? So um, we find that refundable rounds are like what our users are looking for, and this is what we're going after. And so most launchpads are moving towards refundable, but they still have a token. So people have to stake thousands of dollars of the launchpad token just to get access to, and sometimes they don't have enough, like they don't have enough liquidity. They're not like VCs, or as I said, they're retail investors trying to grow their portfolios. As I said, it could be a whale, or it could be like a small investor trying to do something with their thousands, or like $1,000, $2,000. So it depends.
And how many? What's how many people, or what percentage of users do you think take advantage of that refundable opportunity? Because you're right, Max. It is quite it's a unique proposition, I guess. But you're right in that I guess other platforms, maybe your competitors, are looking at that as well, and probably will also implement it. But yeah, how common is it for people to use that?
So I'd say the refundable, like when a sale is refundable, they have 24 hours to decide if they want to keep the token or want a refund. So they can always use it. Like it's like thereby it's a future that they have, right? If they claim the token, then they cannot refund, right? So they need to claim the token, they need to go trade it or do whatever they want on their own wallets, and that's it. Like when they claim, we don't give them the opportunity to refund later, or to, let's say it's a project that has maybe an unlock, like 50% unlock on TG, and then they have like a 3 or 6 months vesting. We will not give them the opportunity. Like they need to stick to the whole investment, right? Once they press the button that says claim, we do. It's basically everyone can use the button. In terms of what percentage is using, it depends on the project. It depends how well it does. What's the FDB? What's the initial market cap? What exchanges they're going to be live on? What KOLs are they using? So there's like a lot of elements that we assess to make sure the project will do well on the secondary markets when they're live. Yeah, so that I cannot say what, but everyone has the chance to use it, right? So that's the beauty of it.
Got it. Got it. Thank you, Max. A lot of projects, particularly if you take it back to the ICO days, they would chase hype, like a token listing, an exchange listing, and then, some kind of exit. But, that is not necessarily always sustainable. So what's the balance, I guess, when you're talking to projects that are looking to come on Coin Terminal? Are you trying to make sure that they have sustainable business foundations, and it's more than just, an opportunity for some marketing and then a quick exit?
Mm-hmm. Okay, so like being totally transparent, we have all type of founders. There will be founders that are looking more on the long term. There's going to be founders that are maybe they want to launch a meme coin. We have all type of founders, of course. We do the assessment, like we do an assessment for every project launching, and we want to make sure their token will do well. So sometimes it's going to be about the product, sometimes it's going to be about the marketing. We do find there's like a lot of projects that have really, really good teams, like in terms of tech, right? Okay, they're like really intelligent devs and really good people building the products. But when it comes to the token side of things, they lack on the marketing side of things. So what's the issue with that? Like the issue with that is that if you have a product that you're building and you launch a token and the token doesn't do well, then basically your token becomes the primary product in the Web3 community. Why? Because everyone will be saying, "Oh, the price action is not good. I'm losing money." Blah 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 blah, and they stop caring about the product, right? The main product that you built maybe for years. So when we talk to founders, we tell them, "Okay, guys, why are you launching a token? That's the main thing. What's the utility behind it? Are you sure? Like, do you want it just to generate revenue? Do you want to build treasury? What do you want to do with the token? Like honestly, right? Sometimes they say, no, we want to build treasury. Sometimes they say, oh no, we want to use it as a governance, like governance for our users to decide on the future of the company. And most of the times, the issue, as I said, like in the beginning of the podcast, is basically they don't have a clear revenue model. Like they're not selling anything to a B2B or B2C or whatever. Sometimes they do rely on the token side of things. Like we prefer projects that have some kind of like fee structure, some kind of like revenue, as I said, just to make sure they can. I'll give you an example. So let's say there's a project that raised some money. They raised maybe 100, 200K on private round. They're bootstrapping a couple of founders. We tell them, okay, guys, you have to go to market now. You have to pay for some exchanges. You have to have your market maker. You have to invest money like pre-TGE, right? And most of the times, they don't have enough money to even go to market, So when they come to us on a public round, we don't pay out the projects before TGE. We pay post TGE. Why? Because we have this refund window after TGE that we need to make sure, okay, what's the amount of money that the project will be getting after the refunds, right? Like depending on the claims or refunds. So we do find there's like how do we make it sustainable, as you asked? It's important that they raise money, like proper. Most of the times they have good backers. They raise quite a bit of money, and of course the token, the FDV, the fully diluted valuation, is aligned with the launch strategy they have. Okay, so I'll give you an example. Let's say there's a 50 mil FDB project that comes to us, and they tell us, no, we're going to be launching on a DEX. That's it. No centralized exchange. Okay, I will tell them, guys, like it's going to be hard for you to sustain the valuation. You need like a proper launch strategy to be able to sustain certain levels of valuation. And we see this a lot. Like we see projects that are trying to raise on huge valuation. We tell them, no, guys, you need to go like lower it down, because you can always grow through the secondary markets if you start from the bottom, not from the top. From the top, the only like if you cannot sustain it, the only way is like going down, 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 and you die as a project, as a founder. Like we're so that's something personally that I think, and I talk to a lot of founders like pretty like this, like I'm talking to you right now. I tell them right away, no, guys, like you need to. So most projects we cannot guarantee they will be like sustainable in terms of like, because sometimes it's about, we cannot guarantee the outcome of a project, right? As a launchpad, what we want to see is, okay, will the token that they're going to be launching, will it do well, at least on the short or like short term, or maybe mid term, kind of like long term we cannot say, because most projects long term they don't do well, right? If you go to like, there's only if they have like revenue models or something, they can sustain the token. So we try to do a balance between it, like as Launchpad, but we cannot, we help praise as much as possible with the go to market, with the to make sure their outcome is the best. But whatever they do, it will depend on the team, not us as a Launchpad, right? So it's a tricky, and you probably agree with like if you go to a CoinGecko, you will see, okay, what are the tokens that are doing well? It's probably going to be at the top 100, and then all the altcoins are probably struggling, and like long term, okay, maybe they had their 2-3 months period that they did pretty well, then they start. So of course, I think the future of Web3 is basically businesses, like revenue, like businesses that have revenue, that are doing a token launch just to as a secondary way to monetize, not as a primary way. I think that's the future. Like they need revenue, because money from VCs, it will not be like infinite. Like it's starting to be harder and harder to raise from VCs, right? That's why a lot of projects come to us, and they rely on our money, right? On our and then we have to tell them, no, guys, we will pay you post TG, so you need to have money in advance to do a lot of things, right? So that's the case with a lot of projects. Yeah.
So what would you say then, are there, can you give people that are listening, perhaps, they might be a founder, they might have a project, they might be looking ahead to get a listing at some point. But what would be like, some red flags that would come up and you would think, okay, this team or this founder is not appropriate for us, just so people can, perhaps mitigate that kind of stuff?
I'll tell you like the 3 elements we like to see, and then what we think are like the reps. So the first 3, like the 3 things we like to see as a launchpad, basically is, okay, who are your VCs or backers? That's basically social proof, right? Okay, who's backing your project? Like who gave you money to build what you're building, to launch what you're launching, right? So, okay, the first one. The second one is, what are your exchanges? Okay, where are you going to be listing? Why? Because we want tokens to be liquid. Like we want tokens to have liquidity on day one, right? We don't want to so we prefer having at least one exchange on every coin terminal project that goes out, right? So that's usually a requirement for us. It could be, I'm not gonna start mentioning exchanges, but it could be something from like a super like low tire, like people here, like they will know, like if they're founders, like they will know the ones that usually are part of the stack. And then you have, of course, the bigger ones that are going to be for projects that raise more money and they have more traction because they're going to have much higher requirements. But we do want at least one exchange. Then on the third side of things is basically KOLs / influencers. So basically, who's going to be talking about your project, right? So we do help projects a lot when it comes to KOL management. So we think a lot of projects lack on this side of things, right? So they don't know who to work with. They don't know. So in our case, we do have a lot of internal insights. Basically, we put a KOL manager most of the times to work with these projects. It's not included as part of it. It's basically, okay, here are your KOLs, and they can add a budget additionally just for the KOLs. So why do we help them with this? At least for now, because the more hands-on we are, the better the outcome of the project most of the times, right? Because a lot of founders, sometimes like the first time they're founding a project, or so. In terms of red flags, I'd say the biggest red flag is founders that are not willing to listen to our feedback. That's a really, like, we don't like this. Like, we want them. It doesn't. They don't have to do whatever we say, but at least they have to give. Okay, like maybe you're right. Like if we're telling you this should be the way to launch, go explore, talk to your contacts, come back to us and tell, okay, guys, maybe you're right, maybe you're wrong. But when we love founders that basically are flexible when it comes to their launch strategy, because that means we as a launchpad, as I said, we have a reputation of like average ROI. The more projects we launch that do well, the better for us as a launchpad. So we want to make sure we have projects that are doing well, as I said on the beginning of the call again. So if the founders are not willing to work with us in terms of like feedback, et cetera, that's going to be a red flag. It's going to be really hard to work with them, right? The second red flag is basically if they're trying to raise on a huge, like super high valuation, super high initial market cap, and you ask them, hey guys, okay, how much have you raised? 0. Okay, like what's the point? What's your traction? How many users do you have on your platform? 0. Okay, why is your project like 100 mil valuation? Like this kind of so this is like a big red flag. So we try to make sure that the FDB or the valuation they're trying to raise on is, like at least decent to what they're trying to, because at the end of the day, we're selling this to retail, and if retail says no, this is not your valuation, the token will not do well, like, or the initial market cap will drop, and that's it, right? So and then another red flag, it could be like in terms of KYB, we do like a really strict KYB, so know your business. So basically every project working with us, they go through like we check, okay, who are the founders, what are the company, et cetera, et cetera. So we want to make sure they're doing like good stuff, right? So because we don't want to have any type of risk, like many projects, like they have issues with liquidity, with this kind of. So we do like a really, really strong KYB to make sure that doesn't happen. That's why we also ask for exchanges, of course, because that guarantees liquidity at the end of the day. And there's like a lot of red flags that we can see in depending on, but I'd say like the 4 elements, if I can add one more, is also good token metrics. So, okay, what's your besting? What's your unlock on TGE? How long is your besting? If you have like a super long besting, your token probably will not, like, it will not be good for users. Like retail will lose money if you have like a 2-year kind of like besting, most of the times. So we try to like see how flexible they are on the tokenomics. Of course, we don't expect projects to have like huge unlocks on TGE, but something decent, But because when you have like huge unlock on TGE, it could be negative for basically for the token, and you're not going to be getting claims. I'd say there's like but it's like I cannot say specifically which ones to for each founder, but we try to do like a really comprehensive assessment on each project, understanding what are the chances of success they have with the resources they have, right? That's really important, because in Web3 you need money for everything. Like money is like, you need to pay, as I said, pay for exchanges. Like a basic exchange is like $60,000. That's a basic one. If you want to go to something like on the middle, it's going to be 200, 300K. to millions. So the stack of just exchanges could be on the millions. So you need money, you need liquidity, you need marketing, you need staff to. So when they don't have money, it's also like a red flag, because we have to make sure that they have money to launch, right? Even though they fundraise with us and they will have extra money, but that money is post TG. So they need money for the pre-TG stuff that they need to align in order to launch. Yeah.
Got it. Thank you, Max. All right. Well, as we start to finish off, I mean, the appeal of Coin Terminal is that, normal, average, everyday retail investors get to buy, the best new tokens before they list on exchanges. So, of course, people can understand the appeal. But just explain how that works in terms of what can anyone in different countries around the world, they can use Coin Terminal. And for people that want to know, not want to know more, they want to use Coin Terminal, just explain, what they need to do, where they should go, and how they can do that.
Got it. So when it comes to the user side of things, if you want to start investing or like contributing to the projects we launch, you can go to cointerminal.com. You can create an account. Right now, to be able to contribute, you need to do a KYC, basically, know your customer. So every user that is contributing to any of the sales we have is basically KYC'd. So they go through a verification process. Of course, there's going to be a couple of countries, basically like the restricted ones, et cetera, that we're not going to be able to take in like contributions from. That's something you can check on our website, depending on what country you're on. But most of the countries will be available for you to invest. As I said, you create an account. You can start with $100 or more. You can see the list of projects that we have, the list of projects that are coming soon. You can select if it's refundable. As I said, you can go there, do your contribution, wait for TGE, which is basically the listing. If you have 24 hours to decide if you want to keep the token or if you want a refund on your investment. So it's a risk-free for user. For the project, they can go to cointerminal.com/coinlaunch/founders. So or on the website, they will see the part on the menu where it says businesses, founders, and they can apply to launch with us. That's the usual way. They apply to launch with us. A PM, project manager from our company, gets in touch with them, and it starts the process. So it's pretty straightforward. We get on a call with them, and we learn more about them, and that's how we work with the two elements. But for a user perspective, it's like 2 minutes KYC, and you can be investing. You don't need a token. You can just deposit whatever you want to you want to invest, and we are adding like new payment methods, because of course we want to also capture like Web2 traffic. A lot of people that are not like crypto savvy, or like they don't have any kind of like USDT or stables. So we're working a lot of things to make sure we can get more volume from retail, from other markets also. Yeah.
Got it. Fantastic. Hey, look, thank you so much for coming on the show today, Max. Thanks for explaining how all that works. And of course, listeners, the link is very simply cointerminal.com. Link is in the show notes. Thank you very much, Max. All the best, and bye for now.
Thank you. Bye-bye.